So I subscribe to the school of thought that any asset is an asset when it is giving you income, and an asset is a liability when you're putting money towards it. So for me personally speaking, I'm in real estate. I want everybody to buy property, but I'm not going to lie. For me, a house that you live in is not an asset, but a property that you rent out to somebody that's giving you income is an asset. So a lot of times I'll have a client come and tell me, look, I've got money for one property today. If I buy a property and rent it out, collect the rent and pay the rent where I'm living, it's pretty much the same thing. What I tell them, it's not the same thing because the way you're thinking is different. So if you buy one house and start living in it and start paying towards the service charges, start paying towards maintaining it, this becomes a liability. You've got money going out. But if you buy a property and you've got income coming towards you, even though you're putting it towards your rent or your child's tuition, there's a fundamental shift in the way you're thinking. So you are most likely going to be that person who has one property, then two, then could have 10, then could have 100, could have 1,000 other properties that are then generating income to you. And then it's not one property that's generating income paying for one rental property that you're living in. It could be 10 properties, out of which 4 properties you use to pay for your rent, but the other 6 is net money in your pocket. So in my personal opinion, everybody should be looking to develop investment properties rather than buying that first property that they can live in. Now in Dubai, things are a little bit different. It can be difficult because landlords, renewals, maintenance are problems. So I can understand that most people find that a little problematic, which is why they want to run into buying a property to live in. But keep in mind, it's better to buy and rent out and get income, because then you can do anything with that income. In a lot of situations, it depends. But in my personal opinion, and I've been looking at property for the last 13 years, both as an investor, as an agent, and then helping a lot of people sell who had properties which were financed by banks. So EMIs are basically the money that you pay the bank on a monthly basis if you take a bank financed property, right? My personal opinion, I think your question means to say, if your EMI is 3,000 and your monthly rent is 5,000, why don't you just borrow money from the bank and own a property? My personal opinion is, while it looks very appeasing and apparently very rosy, it never is. Why? Remember, you are taking the bank as a partner in this business transaction. Yeah? So while you think that you're building equity and if the price goes up, you can sell it for more money tomorrow, remember, if the price goes up by 30%, but the bank's share in that equity is about 20%, bank's already taken that money from you before. Now, this is my personal opinion. It's very controversial and a lot of people are not going to like it. But for me, I like to protect my investors, and I like my investors to win in the long run. Yeah, not make quick money in the short term for myself. That's my personal opinion. I hope I was able to explain that. If not, then I'm happy to go into it further. Okay, so that's a good question. Some people might find it very simplistic, but it's a genuine question. Why? Because a lot of first-time buyers, when they come to me, they ask me, or they've got no idea what are going to be all the costs associated with that property purchase, especially with so much property that's available today on a payment plan, etc., etc., etc. It's very simple. Let's say you're looking to buy a property that's 300,000 dirhams. If you've got add about 6.5% to 7% in closing costs on top of the property price, so 300,000 plus 6.5%, about approximately 25,000 dirhams. If you have that much money cash for the lowest price property in Dubai, which is about 250 to 300,000, you're ready to buy a property, right? But there are certain circumstances where developers have ready product today in the market, which they're giving to you on a payment plan. So the studio is 300,000, pay 50,000, take the keys today, you can rent it out if you like, pay another 50,000 after 6 months, so on and so forth. So in those scenarios, you don't need 300,000 cash in your pocket, but then again, just sit with a broker, somebody you trust, who knows the market and can go over the numbers with you. It's a good question. So I'm always going to favor not going to the bank, yeah, because technically when you go to the bank, essentially you're taking a new partner into the project, yeah, and the bank always pays itself first. Whether you win or lose, the bank always needs to get paid. So I always think, what kind of partnership is this? A partnership should be based on mutual benefit and trust. So if the deal is not going well, for instance, the price goes down after 10 years, the bank should take the hit as well, but the bank doesn't. So whatever you commit to, you always have to pay, number one. So in my personal opinion, the Dubai market, it's has a very strategic, lovely shift. For the last 5 years it's been happening. It's at a very good place where the developers are financing the payment plans. So they're giving 3 years, 5 years, up to 10 years in some instances post handover, which means they'll give you the key. If you've paid like 30%, they'll give you the key, and then you've got 10 more years in some cases to pay the balance. This is beautiful because the developer has taken over the role of the bank for you and is now financing the property to you interest-free or profit-free, so to speak. Obviously, the developer is not going to give anything to you for free. They've got it built into the price. I'll accept that for anybody who makes that comment, but their numbers that are built into the price are not as steep and high as the banks are. As a first-time buyer, I'm going to assume that you are an investor who is looking to start a property portfolio. Okay, so you want to buy 1, 2, 3, and then go on to build and buy more properties in Dubai, the world over. As a first-time buyer, it again depends on your situation. You could go and buy from the off-plan market where the developer is going to give you a finance payment plan, so you have to pay over 1.5, 2 years, maybe 3 years, depending on how long it takes for the project or the apartment or the townhouse to be completed. And you'll pay a little bit of a premium because you're not paying up front. You could buy a similar property on cash, which is ready to move in today or rent out today. Now here's the deal. In Dubai, the 5-year plus older properties were not known to be built on quality. So there's a little bit of a two sides to the coin. You have to look at both sides. If you're getting like 100,000 dirham saving in a ready property today, I would say it's a great deal just by looking at the numbers. But you got to look at a few other things. Who's the developer? Did they build quality? Have they maintained the building well? What's the future prospects of that building? In Dubai, the structural warranty wears out after 10 years, 14 years in some instances. The contractor's warranty on the apartment and whatever is inside wears out after 1 year. If all of this is finished or is close to finishing, guess what? The bills are going to come to you after a couple of years. So in that instance, I would recommend buying a brand new property by a good developer. So, and then it depends on your situation, right? Sometimes you don't have the money to buy a ready property. That's a very good question. That's a real life question, right? So a property was bought at 650,000 and it's currently being sold at 450,000, for instance. Okay, here's the thing. Let's take this particular property as an example. This particular property is very close to the metro station. It's literally walking distance. Even on a summer day, you could walk to the metro station within 5 minutes. My personal opinion, because I know the property you're talking about, it's not the best in terms of quality and finish, okay? However, if you could purchase this property, for instance, at 300,000 dirhams, which is approximately a little less than $100,000, I would then buy it. I would buy it. At a certain price point, the deal becomes very sweet. Like it becomes a no-brainer, right? I remember my time, this was like 25 years ago, I was in IKEA and I was buying lamps. This was in Toronto, Canada. And those lamps were like $2 or $4. So I think I wanted to buy 4 or 5 for my apartment. And I looked at my friend and I said, what do you think of this? And he just looked at me and said, you can't go wrong at $4 per piece. It was a small lamp that you could just stick to the head post, right? And you could read. So you can't go wrong. So you gotta look at the value you're getting today. At the same time, if I gave you something free, but it's only worth garbage, still don't take it because it's worth garbage. Does that make sense? I personally think that nobody should buy a property the first moment or the first time they're offered that property. Okay? Nobody should go to a property developer's launch and get bamboozled and hypnotized by the lights and the girls in short skirts and the nice smile and the fact that the salesman's telling me, sir, this promotion is just for today and it's going to save you 15%. You know what? 15% of what? You don't even know the market price. Like, I could literally say that we're giving it to you for free, you're going to save 90%. You don't know if that's true or not. So if you or any other investor is buying a particular property that's being offered to them at a distressed rate or the rate's really, really good, you should not buy it until you or an agent you trust has completely done all the workings for you to be satisfied. Heart, mind, and your soul are all aligned and says, look, this is a good, genuinely good deal that I'm getting. You shouldn't pull the trigger. How do you do that? You do that by being involved in the market. So there's no good having 300,000 or $500,000 or $1 million dirhams in the bank and you're not actively looking, because good deals aren't going to come to you. You got to be out there in the market, looking, researching, doing your homework, or having somebody else engaged who's doing your homework for you. Otherwise, you ain't getting a good deal because you don't know what a good deal looks like, right? And if it is a good deal and you don't trust it's a good deal, you'll still miss out because you have no gauge, no standard to judge what a good deal looks like. Okay, so good. Dubai is very safe when it comes to investment. Like for instance, if you invested in California, for instance, you can't get your tenant out. It'll be like a year before, even if your tenant stops paying, it'll be like a year plus and you still have to go to court and you're not going to get any money from the tenant. Dubai is not like that. So if you buy a property here, you can continue to maintain your bank account. That's the general rule till today. And you keep getting your rent checks into your name. Companies like mine that are licensed property managers can continue to handle your property for a fee. Your checks go straight into your bank. Your maintenance costs and issues are taken care of by us and by our professional team. And you keep sitting wherever you're sitting, collecting your rent tax-free. I don't think there's anywhere in the world where you can collect rent tax-free 7 to 10% return on your investment. Now the beautiful part about the UAE, specifically Dubai, if you're investing in Dubai, is that the currency is pegged to the dollar. So there's not a lot of fluctuation. So if you had invested in India or Pakistan, the currencies have moved. So you can get less money for what you could have, you can get less dollars for the same amount of money that you could have bought 2 years ago. The inflation in India and Pakistan is higher because of the same reason. We've got 3 to 6% inflation maximum. Other than that, the money's tax-free and it's very clean, very regulated environment. It's pretty safe. So you can either sell your property or just give it to a property manager to manage it. Look, guys, there's tons of questions that I get in. I'd love you to comment and ask more questions. I'd love to pick them up in the next Q&A session. I don't have all the answers. These are based on my personal experience over the last 13 years. Would love to hear your views. Some of you might actually disagree with me on some of those, especially the borrow from the bank questions. But hey, I'm happy to hear. Look forward to talking to you soon. Thanks. Cheers.